Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour With AI. The battle for technological supremacy is shifting from code to cost. OpenAI's pricing strategy has triggered alarm bells among US tech giants. Chamath Palihapitiya and Jack Dorsey are sounding the siren. They warn that American firms face a staggering $56 per million token cost. Compare that to just 50 cents for rival providers. This 66-fold disparity threatens US economic and defense dominance. The gap is not just financial. It is existential. If US companies cannot match these efficiency metrics, they risk ceding ground to cheaper, agile competitors. The era of unlimited compute subsidies may be ending. Capital allocation will now prioritize unit economics over raw scale. Meanwhile, energy markets are tightening with physical constraints. Cushing crude inventories have plunged below 20 million barrels. This structural deficit is pushing WTI Brent spreads into negative territory. The logistics bottleneck is real. Storage capacity is vanishing. Traders are paying to store oil because there is nowhere else to put it. This squeeze highlights the fragility of global supply chains. Energy volatility will likely persist as long as storage remains constrained. Watch the basis spreads closely. They signal the true health of the physical market, not just the paper one. On the macro front, consumer resilience is showing cracks in specific regions. Illinois household debt has dropped to $54,100. That is a decrease of $745 in 2025. This decline suggests a pullback in consumer leverage. It contrasts sharply with national macro indicators that show persistent credit growth. The Fed will watch these state-level trends closely. If household debt contraction accelerates, it could signal broader demand weakness. Policymakers need to distinguish between temporary dips and structural deleveraging. Illinois serves as a microcosm for the national credit cycle. In related news, the crypto landscape is standardizing yield. Grayscale is proposing quarterly cash distributions for its ETHE and GSOL trusts. This move aims to align staking yields with traditional finance metrics. The first payouts are scheduled for August 2026. This is a critical step for institutional adoption. It removes the ambiguity of token rewards. Investors can now compare crypto yields directly to bond coupons. The standardization of staking returns could unlock billions in institutional capital. It bridges the gap between decentralized finance and regulated markets. Finally, Cardano is undergoing a significant governance shift. The Van Rossem hard fork has activated with 77% DREP support. This upgrade enhances Pluto's capabilities and shifts IO infrastructure. ADA price action will likely reflect this technical improvement. The network is moving toward greater efficiency and scalability. Governance participation is high. This indicates a mature community. The fork represents a pivotal moment for Cardano's long-term viability. It proves that on-chain governance can drive substantial protocol changes. That's your market briefing. Follow Rumour With AI for daily market intelligence.